Alan Nachman, Chief Market Strategist at Agora Financial, joins us live from the CME in Chicago. Alan, good to have you with us today. Tell us a bit more. It's been a tumultuous week across markets, making somewhat of a recovery there today, but you get the sense that investors are still a little bit nervous and a little bit anxious because of the big sell-off we saw last week. What is the move that we've been seeing in volatility over the last week or so?
Well, stocks have stabilized a bit. So we had the unkind unwind, is what I want to term it, with the profit-taking pullback we saw last week. You know, it was much needed. Just remember, this market had gone up essentially 10% in a period of 3 months. Yesterday's net was a drop of about 4% across the board in the Dow, the S&P, and the NASDAQ. So a little bit of profit-taking. Let's see how the markets respond and rebound. But looking at the VIX peaked at 29 last week. Now, 30 was an important resistance level because it's the halfway point of the $50 VIX-explosion high that we had in February and the recent lows at 10. So we did not push through that. And if you look at where we stand right now, we're at 20. So that's already a 30% drop from that spike high that we saw on Thursday. So you're seeing that unwind as we've seen many times in the VIX. You get that pop up and then it drops back down as stocks stabilize.
Do you think investors remain in a cautious mood, though, following that fairly abrupt market shakeout last week?
Well, investors are always cautious. The level of optimism has probably declined a little bit, but again, we had an unprecedented move straight up to make new all-time highs. Let's remember that it was just 2 Wednesdays ago in the Dow that we made all-time highs. So we had about a 1,500-point drop in a period of a week, and then actually it bottomed out with a 2,000-point loss in the Dow. So a lot of profit taking. You know, what we saw there was it wasn't a choice where people were coming out of stocks and going into bonds. It was an asset sell-off. So you were seeing all markets move lower. And really, to me, what that meant was that all of those gains had been locked in with stops. And once the market turned over, it went down, hit sell stops, would send it lower, hit more sell stops, and so forth. So it was a snowball running downhill. And eventually, it did find a bid and bounce back a bit on Friday.
Still watching the NASDAQ and some of those tech stocks weighing down the market more broadly. We just can't seem to get that momentum back for a lot of those big tech plays or a lot of those growth stocks. But what about your thoughts on perhaps whether now is time to sort of buy back into some of those growth stocks and some of those momentum plays, if in fact you take the view that last week's sell-off is largely over now?
Yeah, I don't think it's different this time, and we've seen this before in tech. This is the 4th time that we've had a rally of 10% and a decline of 10% so far in 2018 in this tech sector. So it does move. It does present opportunities. So from a risk-reward standpoint, this is another opportunity to take a look at maybe buying some of these stocks that you like longer term. So we'll have to wait and see. But like I said, I don't think it's different this time. We're in the beginning of earnings seasons now, and we're seeing some strong numbers come out, and that could be supportive of stocks from here on out.
Well, let's speak about earnings season, because I note that today, yes, it's going to be a big week ahead, actually. You have a number of those big players coming out a little later this week, like Netflix and Morgan Stanley, Johnson & Johnson, just to name a couple of those. But today we did hear from Bank of America reporting their earnings a little earlier this morning. What did you make of those numbers? I'm not sure if you were watching them all that closely, but just your thoughts on them and what they perhaps tell us about the health of the US financial system.
Well, the one number that I pay attention to is quarterly profit, and they made $7 billion in profit. That's pure profit for the quarter. Now, on top of what happened on Friday, JP Morgan came out with $8.5 billion, Citigroup came out with $5 billion, and Wells Fargo came out with $6 billion. So you combine those three, that's 20, today's 27, and then we have Goldman Sachs that's going to come out in the next couple days. You're looking at $30 billion in profit from 6 banks. And there wasn't a whole lot of market movement, if you remember, last quarter. So those guys didn't make a whole lot of money from the trading market. It was very directional. They benefit more when the markets have more volatility. So they've done very, very well. And the banks are setting the tone, as they often do, for each earnings quarter. And, I mean, this is a fantastic start once again. We're talking $30 billion in profit for 5 banks for the quarter. That's not for the year. That's just for the quarter.